Hey everyone, me Kevin here. Market update. Okay, we've got to talk about consumers. We'll also talk about Extra because this video is brought to you by Extra. But first, let's get into consumers. I want to talk about the Federal Reserve regarding their view of consumers and information that they just released, and also some recent earnings calls because I think they're really important. Watching the consumer is really critical right now. And a course member wanted to point this particular line out to me, and I thought it was great. So every Thursday, the Federal Reserve releases what's known as an H8, and they noticed that in the month of March here, consumer loans in the form of credit cards or other revolving plans had jumped 34%. And this is really interesting. So we pulled this report up in the course member live stream, which if you ever want to join, there's a link down below. Lifetime access to the programs on building your wealth. And overall consumer loans went up at about a rate. This is an annualized rate. So when you see these numbers, this is not how much they went up in a month. It's the annualized rate that they went up. And so we went up at an annualized rate of consumer debt of 23% in March and 34% in credit card and revolving debt. Now, I don't know if that's like, I mean, to me, it sounds like good news for a firm, but it also sounds like there's a little bit more pressure on the underlying consumer for potentially lower income individuals, right? This morning, we talked about Visa earnings, and what we learned from Visa was actually really, really shocking. And just to sort of digress to that for a moment, Visa told us that pent-up demand for travel is very, very high, that there are early indications that spending is going to be very good, that they're bullish on how fast things have recovered. And as you saw in January, the recovery has been very robust. But beyond that, some of the shockers from Visa, which relate to this kind of spending, were that debit and credit card spend was up 45%. Sorry, what do we got here? April spend was up 45% from 3 years ago. This is incredible. 3 years ago, being not 21, 20, but 19, right? We're comparing to 2019. It's crazy to think that that's, 3 years ago. But anyway, look at this. E-commerce spend. E-commerce, folks, both domestic and cross-border, has remained strong and stable relative to trend lines. And the other thing they talked a lot about in their earnings report was that affluent customers were spending more money. So it kind of makes me wonder, is there this possibility that the affluent customers are spending more and that poorer customers are spending less, right? Here it is. In Q2, affluent credit card spending was well above 2019 levels. And this is what they regularly talked about in their earnings report. And so when we look at this Fed report here, it's kind of interesting because it's like, well, consumer loans are going up at the fastest annual pace we've seen this year. And sort of if we zoom out over here, when we look at the prior quarters of the annualized rates of increases in loans, nowhere do you see anything even over 20%. And all of a sudden you see an explosion over here in consumer debt, even as affluent customers are spending more. So it's probably those making less than $70,000, under $50,000 a year. Those are probably the ones, the individuals, unfortunately, getting saddled with more debt here, which is not good, but then makes you wonder, like, if the wealthier people just keep spending, could that keep us out of a recession? I have no idea, but these are things to pay attention to. This is an inflection point that I definitely want to pay attention to. But I also want to pay attention to what we're hearing from other sort of maybe more discretionary purchase items, right? Because we look at the Manheim Used Vehicle Index. What do we see? We see used car prices going down. The Manheim Used Vehicle Index was one of the reasons we saw inflation, core inflation, CPI, fall. Well, not fall, but inflate at a much lower rate. We were going up at a rate of an annualized rate of about 3.6%, which is really, really low. And a lot of that was almost entirely, this was below expectations, was driven by used car prices falling. And they've been falling for about the last 2 months or so. So very interesting that you've got these used car prices falling. You see, which is deflationary, right? You see, or disinflationary, I should say. You see consumer debt going up while at the same time people are still spending money like crazy. But I want to show you this other earnings report because it tells us something interesting as well. But of course, I do want to mention that if you want to build your credit to make sure you get into real estate when it starts getting juicy to buy real estate, you'll know when I'm buying real estate again. Make sure you build your credit with the Extra debit card. Check out the Extra debit card by going to metkevin.com/extra via the link down below. And you could get yourself this debit card, which is super amazing because it could potentially help you build your credit score. What they do is when you spend money on this by linking it to an existing bank account, they will spot you the money over a business evening, pay it off the next day from your bank account because it's like a debit card. You're spending money you have, right? But because it goes through this guise of being a credit card, boom, they could report it to the credit bureaus as balances paid. So check it out, metkevin.com/extra. Stay away from credit card debt and consider them. Instead, metkevin.com/extra. Okay, so The earnings report call that I want to refer to has to do with Harley-Davidson. Now, there are a few more reports we're going to look at here. I'm going to talk about Chipotle. I'm going to talk about Kraft and T-Mobile and some others. Brief touch on Enphase and Goog. But I really want to talk about what we saw going on at Harley-Davidson. So, first of all, Harley-Davidson is not yet seeing a decline an increase in inventory. In fact, inventory levels are still down 24%, and they're getting so much demand that they're actually really confident about their business going forward. Now, see, some folks like to say, oh, but Kevin, earnings reports are lagging indicators. I'm like, maybe the earnings report themselves are, because that makes sense. You know, here we are on April 27th talking about Jan 1 to March 31, right? That's old news. But you know what's current news? Is when you get this, demand signals are strong. We're getting from our dealers that confirm, the signals we're getting from our dealers confirm that demand for product is very strong. These are leading indicators, or at least current indicators, right? They're telling you that right now, at this moment, us as executives of a business that sells goods and services are seeing spending go up, which reiterates what we saw at JP Morgan. It reiterates what we saw at Delta, reiterates what we saw at American Express, Visa. Everyone who's reporting is like the consumer spending more. Now, part of me gets concerned that does that mean we're like in '06 all over again, right? But in addition to seeing this demand, what I thought was quite fascinating was they talk about continuing to deal with the semiconductor shortage and dealing with those cost inflationary pressures, which are actually what they call similar or consistent with what they experienced in the back half of 2021. So in other words, no big improvement there yet on the semiconductor front. And they do show that there's a continuing high demand and reservation request for their products. So this is a really good sign that, you know, people are not fully cutting back on those discretionaries yet. Now, I know consumer discretionary stocks are getting destroyed because everybody thinks the consumer is going to pull back. But like Visa told us, e-commerce is still doing well. And this is so weird because it makes me wonder, like, is this an opportunity to get into, e-com stocks that have just gotten decimated? I don't know yet. But it's something I'm paying attention to because look at this. It's a mix because e-commerce transactions, this has to do with ticket sizes. We talked about that a little bit this morning. But look at this. Regarding inflationary times, right? Quote, net, it's a positive for us, inflation. We have not seen any impact on discretionary spending that we can discern. Keep in mind, they make up 43% of the market's spend on cards. That's insane. If anything, discretionary spending, especially from affluent customers and credit card holders, has been going up quite healthily. It's crazy. Absolutely crazy. So what do we learn when we go to some of the others? I'm going to give you a little bit more of a summary over here. First, Kraft, confident about our production, but we are also growing consumption, that is for their warehousing and rebuilding their inventory levels. And they believe that by rebuilding their inventory levels, they're actually going to be able to sell more product because demand is still consistent despite the fact that they're raising prices. So they see a lot of elasticity of demand. In other words, people are not dropping off because of their pricing. Now, another thing that's really cool or I don't know if it's cool, but it's happening, is businesses are actually pricing ahead of inflation a little bit. So let's draw that out for a minute and try to understand that. So watch this, okay? So let's say this is January right here, and you're the CEO, and you're like, crap, inflation's doing this. Why don't we set a pricing regime that says, hey, we're matched with inflation, let's say right now. Why don't we just shoot ahead of the running deer, so to speak, and start raising our pricing like this, so that way when we hit these inflationary times, rather than reacting to the higher inflation, we've already raised our prices, and we can kind of like let the inflation grow into our pricing, and then hopefully that inflation comes down, and then we're good with our pricing, right? That's crazy that Kraft is telling you that they're doing this, but they're not the only one. Tesla does the same thing. Elon was just saying that on his earnings call, that they're pricing ahead of inflation. They're anticipating the inflation and pricing in. Hopefully that's good news that in the future we would get some kind of like reduction or fall, right? But who knows? So anyway, that's quite interesting for Kraft. For Chipotle, Same thing over here. They're seeing a lot of commodity inflation to the tune of 12 to 13%. Food inflation is in the 31% range, which is also quite wild. There it is, 31%. Another thing from Chipotle's report that was quite interesting was over here, which was that Chipotle's margins at 25%. Dude, that's incredible. Now, they do mean gross margins, right? Because usually with a business, you're taking down like 10% to the bottom line. Let me give you their current bottom line margins. But still, that's a pretty amazing margin. Yeah, okay, so they're aiming for 25%. Wall Street has them at 23.4% gross profit. Their net margin's closer to 10.2%. So that's a little bit more along expectations. A lot of higher costs for beef, avocados, paper, labor costs going up about 140 bips. They repurchase stock at $14.90, so it gives you a little bit of a feeling in terms of where the executives feel the value might be for the company. And then they're also working on an autonomous robot called Chippy, which makes chips, because I guess the employees don't like making chips, so they're like, fine, we'll make a robot that'll make the chips for you. But here's a big one right here. Look at this. And this right here is the big one for consumers. I mean, obviously, says the CEO, what we've seen is very little resistance for pricing so far. The consumer's like, yeah, all right, inflation, stuff's getting more expensive. Yeah, this is annoying, but still gonna spend, broski. It's remarkable. So look, none of these are recessionary indicators, right? These could be, there could be concerns that maybe this is the big spend that happens before a recession. But remember, for you to get a recession, you need negative spend. You need people pulling back. And we're not seeing it yet so far. And that's why I tweeted something. I made this, I mean, I stole the picture, but then I put the text over it. Okay, so I'm trying to take credit for this because I thought of it. But I like it. I actually think it's very appropriate. So the left here is what we saw in 2020. I remember making videos in 2020 and people like, Kevin, this is stupid. Like, the economy is on fire and the stock market's acting like a child on a swing. Like, why is it so disconnected from reality, right? And what do we have right now? Look at this, 2020 stock market on frickin' fire, as in bad, and the economy is what's doing well. Anyway, check out Extra via the link down below in the programs on building wealth, and we'll see you in the next one. Bye.